Don't you worry, we have Matt Cheslock here. We're not slacking off ahead of the IPO. Slack, of course. Matt, nice to have you here on a Thursday. A lot of bullish sentiment around Twitter about this IPO. Why is that?
Well, I think just about any IPO has been bullish. So when you get a new, different type of IPO as a direct listing as opposed to an IPO, people are excited. They want to see how this process works. All the other IPOs have performed so exceptionally well recently. Why not take some of your money and put it into this one? Because it's a new kind of process. People feel like it's more supply and demand and less insider kind of traded. So that's what I think the excitement's about.
Thoughts on the direct listing?
It's interesting. I think it's predicated upon when you actually list. You get a market that's up 1%, that's a good time to list. You get a market that really maybe is a little bit weaker. If this happened in May, it would have been interesting to see what happens without having the backstop of an investment banker or roadshow. Building that book is important. Knowing where there is, some excess demand possibly allows an investor a little more comfort when they get involved.
Matt, they couldn't have picked a better time. We are up today, obviously, on those rate cut hopes. But why is the VIX up alongside stocks?
That's interesting. You see the bond market reacting the way it is, too. You see the 10-year keep going higher and higher while the market's going higher and higher. So usually it trades a little bit inversely, where you get people that are a little bit nervous. They want to buy bonds because they want protection. So they get out of the riskier investment, which may be stocks. Not this case. We're hitting all-time highs in stocks. Bonds are higher. The VIX is higher. So I think there are some concerns out there. The bond market seems like it's pricing in a recession. The way the 2-year, the yield is under 2%. So, there's a lot of conflicting data out there. It's not just all euphoria. What is the Fed looking at? They're worried about inflation now, focusing on that and not growth. Growth is, maybe stagnant. That's why you would cut rates is to help growth.
Do you have any side?
I don't. It's interesting right now, as an equity guy, you play what's in front of you, right? The trend is still a little bit higher as long as growth continues to maintain an upward trajectory. We haven't seen the Fed or other banking, the beige book numbers were pretty good as far as their expectations. And so until that changes, you still have to ride this trend.